I mean, the NSE trading downwards again, and this seems to be a trend. I mean, considering that just a month or two ago, the NSE 20 was in the 4,600 range, and now we're in the mid 5,000s, 4,500s. Why is that?
Yes. Well, if you look at it just the same way like a part of America, they're looking at the Black Friday. We're actually approaching the last week of what we call the beginning of the festive season. And with that, there's also a lot of, if you look at market activity-wise, you notice there's a lot of selling of shares, so to speak, and there's less interest as before, with a lot of investors looking at now divesting in terms of their investment. So that also plays a very big role in terms of how the market performs.
Now, the focus right now is on KPLC, the Kenya Power and Lighting Company. They'll be launching their rights issue the 1st of December. The company is hoping through the rights issue to launch 1/4 of a $500 million float that they need for expansion. Will they be able to do so on the market?
Well, I would say going by what we noticed today, actually, KPLC was one of the most actively traded stocks in the market, with about 2.5 million shares ranging between 30 shillings and 50, which is a high for it, and about 25, 22 shillings and 50, which was on the lower end. If you go by that trend, it goes to show you that because the close of books was about the 25th of November, which was on Thursday, whereby whomever was on the books now would get into the share split. But that goes to show you that there's a lot of demand for KPLC. There's lots of positive attributes towards it in terms of the way it has stated it's going to run its business going forward.
Okay, just talking about how it's going to run its business going forward, we know that the government as a major shareholder is not participating in this rights issue. Instead, what they're going to do is issue KPLC a soft loan of about 16 billion shillings and leave the rest of the fundraising to the market. Why have they decided to go this way?
Well, if you look at it going by other news, if you notice that the World Bank, for instance, has actually extended Kenya 40 billion line of credit in terms of more or less to partake in the infrastructure. And this is but one of the key areas that the Kenya government wants to facilitate in terms of growth. And KPLC being at the helm of one of the key infrastructure projects within the country, because once you have more power distribution within the country, this will enhance in terms of profitability, because you have more people in terms of distribution, and hence there will be more demand for power. And when you look at the bigger picture, it goes to show that eventually the end benefit will be the government. And by converting and actually not taking up, it just means that there are more shareholders will come on board with the yet to be, which is a company that is actually bound to be more profitable in the future.
All right, other stocks to watch this week has been NIC Bank, which posted a 69% jump in pre-tax profit, attributed to growing loan books and also reduced operating costs. Not to focus on this particular bank, but just generally what it reflects in terms of the recovery of the financial services sector, and also all of this in the context of the CBK deciding to keep rates unchanged.
Well, there are certain things that are pretty much predominant, because if you look at from 1st of July, the deepening of the East African economy with the expansion and inclusion of the other East African economies, that's Uganda, Rwanda, you have Tanzania. What has happened is that there's been more demand in terms of goods and services within the key area. And NIC has always leveraged on its strength, which is asset financing, especially in the transportation industry, a bit in the construction, warehousing, and the whereabouts. But when you notice with the transportation industry, a lot of goods, if you notice, Kenya's strength has been a lot in the manufacturing industry. And this has also meant that owing to certain countries being landlocked and not having a well-developed transport system, a lot of goods have been moving from Kenya to Uganda to the countries of Rwanda and Burundi thereabout. And this has actually been one of the key strengths for NIC Bank, because with its asset financing model and being in the business for almost 40 odd years, going on to 50 thereabout, it has been one of their key strengths in terms of asset financing.
And then just in terms of your views on the CBK's decision to keep rates unchanged, wanting to really give a little bit more momentum to credit growth within the economy, will this decision help?
Well, if you look at it like now, the central bank lending rate has been about pegged at 6%. What they're looking at is that this will actually, in terms of spark growth, because there'll be much more money in circulation for lending. It will be easier for corporations as well as individuals to access loans at cheaper rates, as opposed to if the CBK was to raise the common lending rate. Well, this has proved to be of benefit, because if you look at what the banks have been posting in terms of the profits, most of the financial industries, institutions have actually been on a positive note, and that is a trend going forward. So in essence, what we would say is the CBK is actually stimulating growth by maintaining that lending rate at about 6%.
Other movers in the markets today, when you look at the NSE's website, some of the gainers today, Kakuzi, Ati River Mining, Bamburi and the Scan Group. In terms of your stock picks?
Well, I would say out of that, I would say look at Bamburi. For the longest time, Bamburi has been positive. There's been a lot of growth on their sector, and they've also been looking at expansion within the East African region. One other stock I'd look at is TPS Serena. TPS Serena has been positive in terms of the way it has been growing. And then looking at the tourist season and the way they've moved about in terms of expanding, that's also a stock forward.
Oh, Waiyaki, we've just lost you there, but a final question because I can see you all over again. In terms of the currency, we are seeing a situation where the dollar is improving slightly, and that's largely as a result of what's happening in Europe, but the Kenyan shilling tends to track the euro. So in terms of the shilling being at 80 shillings 80 at the moment, are we likely to see a worsening in terms of the exchange rate?
Well, normally we'd notice that it was bound to be around 80-50 range, 80-45, which is what a lot of dealers, forex dealers had actually anticipated and within the banking fraternity. But yes, going by the way it is, having to track the euro, you notice the euro's weakness has tended to also be its undoing. So would more or less be looking at it within that 80-70, 80-65 range.